Bitcoin saw a meteoric drop yesterday, breaking the structure support we have maintained since the beginning of 2023. At the same time, we came within $1,000 of the previous higher low formation, and if we dropped below that, this would have been the end of the current bull market for Bitcoin. These are some really scary times, and in this video, I'm going to show you exactly why this drop happened. There's multiple reasons that combine to create this drop, and I'm going to show you exactly what we need to be preparing for moving forward. Let's jump into it. Now, there are two main catalysts that we saw that began the drop. The first one actually happened on right here, August 16th. Let's check it out. FOMC meeting minutes release indicates that the Fed may not be done with rate hikes. Another interest rate hike is still on the table, according to Federal Reserve officials. The newly released minutes from the Federal Open Market Committee's July 25th to 26th meeting show that while some officials were prepared to continue June's interest rate hike pause, members continue to view inflation as a threat and are willing to hike rates further to address it. Most participants continued to see significant upside risks to inflation, which could require further tightening of monetary policy, according to the minutes. Will the Fed hike rates again? While participants acknowledged that there has been a softening in core goods prices and other tentative signs that inflation pressures could be abating, they also stressed that inflation remained unacceptably high and said that they would need more evidence to be sure inflation was heading towards the committee's 2% goal. Chair Jerome Powell in July said it's certainly possible we would raise rates again at the September meeting, and it's also possible we would hold steady. The market does not like uncertainty, and because of that, you can see this candle right here was bearish. It caused a lot of traders to exit their risk on assets like Bitcoin, and this caused a drop in price. This was the first major sign of the drop incoming. However, this little bearish bar is nothing compared to what we saw yesterday. Let's check out what caused the nearly 9% crash in Bitcoin. Evergrande files for US bankruptcy protection as China economic fears mount. Embattled developer China Evergrande Group has filed for U.S. bankruptcy protection as part of one of the world's biggest debt restructurings, as anxiety grows over China's worsening property crisis and its impact on the weakening economy. China unexpectedly lowered several key interest rates earlier this week in a bid to shore up struggling activity and is expected to cut prime loan rates on Monday. But analysts say moves so far have been too little, too late, and with much more forceful measures needed to stem the economy's downward spiral. Once China's top-selling developer, Evergrande has become the poster child of an unprecedented debt crisis in the country's property sector, which accounts for roughly a quarter of the economy after facing a liquidity crunch in mid-2021. Now, traders that have been around since 2021 will probably actually remember the Evergrande crisis that happened back then. It did create a stir in the crypto market and a drop. I think the filing for bankruptcy here, as you can see, the developer has sought protection under Chapter 15 of the U.S. Bankruptcy Code, which shields non-U.S. companies that are undergoing restructurings from creditors that hope to sue them or tie up assets in the United States. By filing for Chapter 15 bankruptcy, I think it scared a lot of investors. Keeping that in mind, you'll see here that the S&P 500 saw a significant drop in price. The Dow Jones saw a similar drop in price, although interestingly, the Nasdaq was bullish. However, we're here to learn about Bitcoin. After the news broke, almost immediately, Bitcoin saw significant drops in price. I think as soon as it crossed below this gigantic structure support that we've respected for 8 months now, was finally broken. I think at this point, at the point of breakout to the downside, that's when traders became liquidated. This created a long squeeze, which caused a flash crash in the market. If you want proof of that, just check out this data. In the past 24 hours, 165,017 traders were liquidated. The total liquidations come in at $975.17 million. Nearly $1 billion was liquidated in 24 hours. The single largest liquidation order happened on Binance using ETH BUSD with a value of $55.92 million. That is horrible. Nothing in the crypto market was safe yesterday. You can see, regardless of what we look at here, giant drops in the market are very, very consistent for that time period. Yesterday was horrible. Yesterday was really scary for everyone that was trading. With all of that in mind, what happens next? First, and probably most importantly, if this candle right here, it's already opened outside of this structure support, But if it closes outside of that, this will constitute an official breakout to the downside. This is not good and actually creates a significant barrier for Bitcoin's continued moves up. Worst case scenario for me is if we actually drop below this structure support at $24,750. This is the price of Bitcoin's previous higher low. In order for uptrends to continue, what you need to see is a higher high, followed by a higher low, then a higher high, and a higher low, higher high. That needs to continue, and if it does not, that is the end of the uptrend and you're likely to see moves down again. Now, there's no reason to panic yet. We have not quite reached that, but if we do, if we break below this, it's going to be catastrophic. If you thought this drop was bad, it's going to get much, much worse if we break below $24,750. Best case scenario in this instance would be a drop to around $21,366. I kind of don't even want to know this number, but we're going to check it out anyways just for the sake of accuracy. If that happens, from the current price, this would be a drop of 17%. And from the top of this move, starting on August 17th, this would be a drop of 26%. Absolutely catastrophic. With that in mind though, let's check out some indicators. I think you might find some peace in this. What you're looking at right now is trade confidence indicators. These things have absolutely crushed it. Just real quick, these indicators are actually responsible for our 63 win, 0 loss trading record. We currently have 13 trades open right now. A couple of them were called out this morning because we have confidence in our indicators. Percent beating the S&P 500 yearly average by 2,520%. Insane what these indicators are capable of. I really want to show you a pattern here too. Right here, very beginning of 2023, we saw price versus well money flow low. This tells you that whales had oversold and were likely to begin buying into the market soon. And at the same time, we dropped into long trade zone right here. From there, we saw a crazy move to the upside. And after that, we saw a drop right here. As we bottomed, we saw price versus well money flow low. We saw trades in favor low, crazy move to the upside. As we bottomed out, price versus well money flow was low. Trades in favor was pretty low. Not quite long trade, but pretty close. Crazy moves up. And right now, you're seeing price versus well money flow low. Trades in favor crazy low with an 89% chance of a pump. These indicator readings make me very hopeful. And the last thing I'm looking for is a buy signal right about here as we retest this structure support. If we see a buy signal with price versus well money flow low and trades in favor low, this is most often extremely bullish. Now, if we switch over to the support and resistance metrics, you'll see a structure resistance at $28,477. Putting a line there just to make it a little clearer, I think this could be the next structure resistance we test, especially with the cross right here between the horizontal structure resistance and the ascending previous structure support. From the current price, this could be a move up of about 10%. This would be very, very beneficial to our traders. It's really tough to tell right now though, and because of that, we're paying really close attention to these indicators. Now, if you want a more in-depth perspective on these indicators, Travis actually just released his own Bitcoin video going over multiple time frames worth of readings. He'll give you his perspective there, but for now, if you want to get access to these absolutely insane indicators that have protected us throughout this current bull market, I can get you up to $550 off right now. Crazy deal. If you want to take advantage of the discount right now, just go ahead and check out the links in the description down below. From there, you're going to scroll down, click more, and the indicator link will be the second one. Go ahead and click that. It'll bring you to the Pro Indicators page. What you're going to want to do is scroll down here and check out the Pro Indicator pack. Now, our members get a massive $150 discount to start off. This is much higher than the non-members, and it's actually much cheaper to join our membership to get this discount. On top of trading data, members only content, and more, you're going to get access to our scalping trades that have earned us 63 wins and 0 losses so far. So you'll be able to profit in that way as well. Once you have the membership, click the access coupon code link and then click Pro Indicator Pack. From there, you just want to click I want this, fill out your information, click pay, and it'll offer you the TC Top and Bottom Finder for $400 off. That combined with the membership discount gets you your full $550 discount. Just click add to cart here, follow the prompts, and we're so excited to trade with you soon. This was a big video. Thanks so much for watching to the end. We really appreciate each and every one of you. We'll keep everyone updated as this is an evolving situation. With that, I just want to say thanks so much for watching. Trade safe, trade confident, and we'll see you in the next video.